So, uh, today we'll be talking about the chart analysis and the risk management. So, but I'm still thinking of how I can do the chart analysis because it's a very broad stuff. So I've been thinking about to do it, but I'm thinking of picking a topic there, and I'll just give you the explanation. So, but okay, let's do like this. Okay. I will start with the risk management. Then I will talk about the chart analysis and give you some analysis. And those that know how to analyze charts, I will give them some tips. And even you that don't know anything about chart analysis, also I will tell you how to get started right from start and right from as a beginner. So uh, let's get started. Um, uh, Um, for the risk management, as a trader, if you're talking about risk management, uh, if you're a trader and you don't know how to manage risk, automatically, you're not a trader. The reason because irrespective of any amount of funds you have funded in your account, you still blow it because you lack risk management. But if a trader has a good risk management, even if they give that particular trader $10 or even $2 to manage for them, the trader will manage it very well without blowing that particular $2. You understand? But a trader that does not know risk management or that is not very well versed in risk management, if they should give the person even say 200,000, the person will still blow the account because a person lacks risk management. We are talking about risk management is something that is not very hard, but that a trader needs to be cautioned about. Risk management is all about ability for you to manage the risk, as a trader. Well, we're talking about in the market, both in the forex market, crypto market, stock market, binary market, CFD, commodity market. There's risk involved. Do you understand? And the risk involved is that you can lose your money. Do you understand? That is why in all trading market generally, there's risk. And as a trader, you must be able to accept that there is risk. Even if you are selling pure water or you are selling bread, there's risk. There's risk that the bread might spoil, that is might not see anybody that buy that bread. There's a risk involved because if no one buy that bread within 3 or 4 days, the bread might start to maybe to get hard or bring going out some muck or any other stuff. Or you're a pure water seller, there's a risk that the possibility that the pure water might get bust. Do you understand? So any business that no one does in this life, there's risk involved. So, but as a manager or as a trader, the first thing is what for you to accept that, okay, I know that there is risk in this thing. So, okay, I'm ready to accept that there is risk. So, how do I manage my risk so that I won't go into loss too much? Do you understand? So, if he's a bread seller now that wants to manage the risk of not selling the bread within 4 days, so he might decide to go into marketing or to make people know that, okay, I'm selling bread, though, or the person might try to do EOQ, or we call economic order quantity. That is, we try to reduce the stock once you see that demand is not up to what to the supply. So those are form of risk management for his own aspect. But as a trader, it may be in the forex market or the cryptocurrency market, if you want to manage your risks, you understand, the first things first is don't over leverage yourself. So that's the first thing first. Once you don't over leverage yourself as a trader, so once you don't over leverage yourself as a trader, you don't have any problem. Do you understand? And the second thing, that don't be greedy. So once you are not greedy in the market too, you don't have any problem. But the moment you are greedy, you understand, the moment you are over leveraging your position, the moment you are inputting what you can afford to lose into the trade, that is where loss of control comes in. Because as a trader or as a normal human being, let me just explain to you. if someone should lose, even if it's ordinary $1 you lose in the market, you be feeling aggressive, you be feeling pain, you be feeling like you want to revenge from the market, like you want to collect your money back. Do you understand? So let's assume now you have $100 in your account and you place $50. Do you understand? And your $50, the $50 got liquidated. So as it got liquidated, you have $50 left. You be hungry that why will the market, why will this stuff liquidate me, or why would this trade go into loss? You want to use the remaining $50 to collect your money back. And in the presence of that, we call it market revenge. No trader can revenge, like can take revenge from the market. Do you understand? No trader can take revenge from the market. You don't have to kind because at the time that you want to revenge and use the remaining $50 to collect your money back, at that time you will not be calming down. You won't calm down to analyze the market properly. You won't be able to see, okay, is it good to place here or is not good to place here? Because what will be on your mind at that particular time is that you want to revenge the market. You want to collect your money back. Until you collect your money back, you won't have rest. Do you understand? So as a trader, for you to avoid that kind of stuff is to first thing first, put what you can afford to lose in any trade. Even if it is spot trade, even if it is spot or futures trade, put what you can afford to lose in it. So put what you can afford to lose in it. Do you understand? So what was I saying? So the moment you like now, someone have $100 now, like just make an example now. If the person should put in $20. Okay, let's say person I can afford to lose $20. He puts $20 into the first trade. And let's assume the $20 got liquidated or he lost the money or he's in a big dip, maybe he's even on spot, it's a big dip that he can't even sell the money. But he has $80 left. The $80, I can tell you that $80 can still cover and still bring more profitable trade to recover that $20. But because if you are seeing $80 in your account, you see coming down that, okay, wow, I still have money to place trade. But someone that went to use, that has $100 in his account, I went to use $50 to place trade, and $50 is gone. You know, you'll be more aggressive than someone that used $20 to place trade. Do you understand? Now, so that's the first thing first. Any trade you place, whether on spot, on futures, or even in Forex, anywhere you're placing trade, make sure you use what you can afford to lose to place that particular trade or to open that particular position. Don't be greedy. Now, as a trader, normal thing is the good days, good night. It used to do me too. You understand? Yeah, it happens to me too. You understand? So there's greediness in trading. So because it happened, there was a time when I and my friend, he's also one of the admin of that group. We started with binary option trading then. I know most of you might know binary option. We started a binary option trading then, and we carried our binary option trade. We found $30 then, and $30 within 2 weeks, we carried $30 to $7,700. And the funniest thing that we lost the money, the whole $7,700, we lost everything. This is because we lost risk management. Because at that particular time, we were going more big inside the trade. Do you understand? Instead of us to take caution and apply some risk management, we did not do that. But because of our greediness, that made us lose the whole money. Do you understand? So, and at that point, even the first time we also lose the money, when we had $7,700, we only lost $2,000 something. But because of our aggressiveness, that we want to recover our money back on the market, just like what I'm saying now, that's what led us to lose the whole 7-7, and we lost everything. After we lost everything, our body now calmed down that, wow, we fucked up. It is when you make a mistake, that way you know you fucked up. It's normal. Do you understand? So to avoid all those kind of stuff, you have to make sure you place trade with what you can afford to lose. Now, I know some people you see that, oh, this guy using 50x, this guy using 100x, this guy using 500x. Let me to join him. No, don't stay with what you can afford to lose. This is because that I'm using 100x or 50x to place a trade. First thing first, I'm very sure that with that particular trade, you should go in my direction. And the second thing is that what I'm using to place that trade, if you should liquidate, it won't pay me. I'll just overlook it. I will look for another trade again. Do you understand? But someone that cannot afford to lose that particular amount of money, if you should enter with the same leverage as mine, do you understand? Let's say the trade did not go in our favor. I might just overlook it that okay, it's what I can afford to lose. But the person that I didn't put what I can afford to lose, we pay the person. Do you understand? Just like I dropped Shiba Inu yesterday. So the Shiba has its our own take profit. Do you understand? And most of us are even be happy. We are happy that okay, it is gone. So someone that missed the trade, he messaged me. So he went ahead and placed the trade on his own by shorting it again, even after we have left the trade. What the person is doing, the person is FOMOing. He don't want to miss out the profits that Shiba Inu is sharing. So he went ahead to short Shiba again on its own. And what happened? He stopped out. And he lose 50% of his capital. And he now came to my DM and I was like, boss, what happened? I told him that did you went on your own? I used my own signal. He said he went on his own. And I said, sorry for the loss. He now say, I shall console him that I should not worry. Everything is good. You understand? So assuming that even though he went on his own to place the trade, assuming he used what he can afford to lose to place the trade, he won't be feeling too bad. Even though you may feel bad though, but you won't be feeling too bad because that particular trade he lost 50% of the capital. Do you understand? Or because he did not use what he can afford to place to trade. So, which is very, very important. Always use what you can afford to place the trade, irrespective of what might happen. Do you understand? So, that's for that. And also, again, let me just share this one too. I have a friend of mine too. I introduced him to futures. He's a very close friend of mine. And he started placing trade. He was making profit, but he was using, I've told him several times, use what you can afford to lose to enter trade. Future might be sweet today, but tomorrow it might change, it might chop your eyes. Do you understand? So he went on his own and started placing huge money inside the trade, $400, $500, and he'll be using high leverage again. He's not even using low leverage. And I even told him that, okay, if you want to use big money, make sure you use stop loss. It's very important. Don't use stop loss to play. It's not for decoration. Use it. So he went on his own and started not use stop loss. He said the trade were running in profit. Just say he went to go and sleep, and he woke up and the whole position, everything's gone. And he lost over $1,000 plus. All because he went to sleep and wake up. And I told him that, didn't you use stop loss? He said he did not use. I told him that I told you several times, even if you are using place any trade, don't think you are smarter than the market. Always put stop loss. The stop loss is not for decoration. It's for something. It has a purpose. That is why it is called stop loss. You understand? You might not even put take profit, but that stop loss is very important than take profit. Because if the market should start going against you, what will you use to guide yourself or to protect yourself against the market? So that's for that. So, like I said before I end this risk management, first thing first, use what you can afford to lose to place trade. Is very, very important. Even if you're analyzing the market yourself, it's always very, very important. I do trade Forex too. Do you understand? And I do trade binary option. And I'm able to say that only what you can afford to lose to place trade. Don't be greedy. See, in the market, there is a lot of money in the market, and you can't be placing every trade every time. So there are opportunities. Opportunity can never finish in the market. Do you understand? So it can never finish. There will always be an opportunity. That's why you don't have to use. That's why you don't have to even borrow money and say you want to use it to come and place trade. They don't borrow money to place trade. Do you understand? They don't borrow money to come and trade. Use your own money, your own personal money, because if anything should happen, you won't be thinking and blaming yourself about why did I do this? Do you understand? So it's very, very important. So don't over leverage yourself. Don't use what you know that you can't afford to lose to enter trades. And also, it's very, very, very important that you apply the proper risk management in your trading. So that's for that. And we also be talking more maybe later on. We have another class again. So let's go to the chart analysis and the chart reading. So how I'm going to do the chart reading. Okay, fine. And that came to my head now. So let's go. Let me look for an empty chart. Let me look for an empty chart, empty chart. All my charts here are always, there's always something on it every time, no matter what. Where can I get into chart? Okay, don't worry. Let me go to another exchange. Unify. Okay. Uni. Let's go to another exchange. We find an empty chart. Let's come here. Okay, perfect. Okay, so this is an empty chart now. And let me go to daily. So we are talking about chart reading and chart analysis. Is a very, very interesting thing to know as a trader. That is a tech analysis. And if you're talking about trading, trading splits into two. Be it maybe a forex trader, be it a crypto trader, stock trader, commodity trader, any other trading that you know. Do you understand? I can't hear anything. Can you hear me now? If you can't hear me, just thumbs up or say I. Can you hear me now? Okay, thank you. Oh yeah. So, if you're talking about trading, it's split into two. We have the fundamental analysis and we have the technical analysis. We have some traders that what they know is technical analysis. Those ones, they know how to get information about any particular coin. They know how to source for information online. Do you understand? Anything that do with the theoretical aspect. Do you understand? Maybe the news, the upgrade, the maybe the mainnet, maybe a new development, or maybe a partnership, maybe a good news or a bad news about that particular currency is what we call fundamental analysis. Do you understand? But anything you see on the chart, candlestick, you draw trends, you draw support and resistance, you draw you put your indicators, Ichimoku, Bollinger Bands, anything you do on a chart, that we call technical analysis. And technical analysis is basically if you are using past or historical data to judge the present or the future. That is, you are using what has happened in the past, maybe what they can do or what that particular coin has printed in the past to judge maybe, okay, oh, this coin should long or should short. That's all about technical analysis. And even if you're a forex trader, fundamental analysis also apply because you must not go and check news. Maybe there's 3 bull news or 2 bull news. In 3 bull news, if you are trading during 3 bull news, if the trade should go against you, it will be a mad loss if you not use stop loss because it's either the news pump it or it's going to dump it. You understand? So fundamental analysis also apply to stock also. Maybe the company have a partnership with another company and all those kind of stuff is going to increase the stock value, or maybe the company is expanding, is going international, all those kind of stuffs. You understand? Is also important too. So all those ones are fundamental analysis. This is just to show you that the fundamental analysis applies to all forms of trading, both forex, stocks, commodity, crypto, any trading. Fundamental analysis is also there, and when technical analysis is also there. So now you can choose to be a fundamental analysis trader, or you can choose to be a technical analysis trader. So there are some technical analysts, do you understand? And I don't know about fundamental analysis, but they know little, even though those they don't really use it. But all they know is just technical. Because most time technical align with fundamentals on the chart. The last time that Elon Musk posted that they okay, is no more accepting Bitcoin as payment, that Bitcoin dumped the market. Before he posted that, it was already on the chart that Bitcoin is about to short. Do you understand? So what it remains that maybe there's a buying prayer or a sell prayer. It's just that the Elon Musk tweet make the shorts faster for us. Do you understand? Because assuming Elon Musk did not post anything like that, it might still be ranging in that region before it just short or long. You understand? So most time, fundamental always align with the technicals. Now, another example is look at that Shiba, that we shot yesterday. Funniest thing that I only look at the chart and I analyze it and I say that okay, it is ready for this stuff to short. It was later on, after we have even left the market, someone had posted or send it to me personally. I'll tell you that because initially they said that Elon Musk wanted to, is he accept or partnership with Shiba also, and he was saying that Shiba will reach $0.2. So me and one admin was still arguing that it's not possible. We kind of rush with that one. So another person sent to me again that Elon Musk said that he does not have anything to associate with Shiba. So that was why it's short. Imagine the news. I didn't actually see the news, but me, I only went to look at the chart and we short it. So this is just to show you that most cases or most times, fundamental always align with the technicals. Do you understand? So that's why if you are very good in technical analysis, you be trading as if you even know fundamentals. Do you understand? And most fundamental traders can't trade without any news because that's what they know. So they'll be waiting for news to be released before they can trade. So that is why most times I would say technical supersedes fundamental. But main talk in terms of strong push, something that will push the market very well. Fundamental always push the market than technical. So that's all in just the difference between the two. So now let's assume now you are a trader. Like I said, technical analysis is mainly a fight between the buyers and the sellers. That is, we have the buyer. Let's say this is the buyer, and let's say this is the seller. Do you understand? Why this stuff not deleting? Sorry. I don't know why this thing is not deleting. Okay, so it's basically a fight between the buyers and the seller. That is what technical analysis is all about. So that is, let me show you a particular, let me go to the chart and show you something now. We have red candles, we have green candle. The red candle means that the sellers are pushing the price downward, while the green candle means the sellers are pushing the price upward. Do you understand? So whenever you see that there's more of green candle printed, that means the buyers are in control of that market. So they are pushing the price upward. But when you see that the market is printing more of red candles, so that means the sellers are in control of that market. So they are pushing the price downward. That is why technical analysis is all about you knowing that it is a fight between the buyers and the sellers. They are checking or they are fighting to see who is going to win between the two of them. Maybe it's the seller will have the upper hand or the buyer that will have the upper hand. So the moment the buyers has the upper hand, you push the price upward, the price will continue to shoot. But the moment the sellers have the upper hand, the price will come down. And the moment both the buyers and the sellers power are equal, you see that particular market will be ranging, will be going sideways that it will just moving. It will be moving like this, maybe there is sideways movement. It will go up, come down, go up, come down. But if the buyers are in control of that particular market, you can see that the price will start moving up, moving up, moving up. But if the sellers are in control of that market, you see that the price will start moving down. Do you understand? But once their power is equal in the market, you see that the price will be moving sideways in the market. So once you know that, that's basically what it is. Fine. The next thing to know now is that every candle you see on the chart represents a fight between buyers and the seller, whether it's a green candle or a red candle. Like now, let me show you an example now. Let me use this current one that is printing. Let me use this one. The current one that we have currently, like, is still printing actually. It's still printing actually. Do you understand? But it's still printing, but we have a green candle here. Do you understand? So now I circled it now. If I should go to this is a daily candle, if I should go to like 4 hours. Let me go to 4 hours. Can you see now? Inside the 4 hours candle now, the one I circled, that is just a single candle. It consists of several candles. And look at there's red candle, there's green candle inside. So the buyers and sellers are inside that particular 1 day candle. But I should break this 4 hours candle to maybe like 2 hours now. You will see now. Can you see again? If I should break it down to 1 hour, you see that the same candle I circled though. But look at what is inside. That is why every candle you see is consists of both the buyers and the seller. It's a fight between them. Do you understand? So, as a tech trader or tech analyst, you must know how to analyze a fight between the two of them. If you're a very good trader, you looking at the candlestick already, you can see that this coin is long, this coin is short. You may looking at the candlestick because you have familiarized yourself with what with the market. Do you understand? So, and another thing again, before I end this class, is that by a particular candle, let's say this is a candle now. Do you understand? This is the body of a candle. But when you say a particular candle having something like a small thin line or thin stick underneath or above it, we call it wick. W-I-C-K, wick. While the remaining part of it is called what? The body. Do you understand? Let me show you an example. Look at this one now. Look at this current red candle. This current red candle we have now. This red candle now. This point and this point now is the body of the candle. Why this thing like look like stick underneath that red candle? We call it wick. That is a buyer's region. Now is a red candle. The candle actually opens here, and the sellers push it down to this tip. Do you understand? The buyers enter this candle, enter this market, and push the price back to this point where it is currently. Do you understand? So this particular region that is seen here like this is the buyer's presence in this particular candle. So this presence of buyers in the candle. Why this red part that is fully red with this body is called the seller's what? Presence. Do you understand? So that's for that. And while and also look at this one also. Look at this green candle also. This green candle. Look at this green candle. This particular green candle like this. This one, if you look at it, it opens around here because it's a green candle. It opens here, and the seller push the price downward to this tip. If you look at it, it has a small tip, like a wick underneath. Let me carry it up. So it has a small wick underneath here. And this is it. Can you see? Now, they push the price. Market opens here, the candle opens here, push the price downward. The seller pushes the price downward. And after the seller pushing the price downward, and what happened? The buyers enter the market and push the price upward. So this little part, this wick, is the presence of the seller in this green candle. That is why every candle you see consists of both the buyers and the seller. So, which is very important for you to know. Do you understand? So, that is, I will end the class here currently because there's no way actually I can explain the whole technical analysis for you in this single day. Do you understand? But I hope this lesson or this particular class, you guys gain something. So next class, we hold again. We find another topic to talk about. So this should hard to you. So thank you very much. If you have any question, please raise up your hand and I will answer your question before I go. Who have any question? Okay. Unmute yourself, Mr. Jamil. I guess you have a question. Okay. If you have any questions, signify by raising up your hand. If you have any question. Okay. So since that, okay, I guess someone is having a question. Yeah, okay. How can we have it? Please record. Okay, no worry. I will send the record to you. That's no problem. I'll record it. Sure. I will send it. I will send the record. I will send it. I will send the record. I will send it. So since there is no question in the house, so thank you very much for your time. and for joining this particular class. It's a great thing to have you guys again. And I'm so pumped. Okay, someone is having a question. Yeah? Okay. Miles, you have a question. Okay. Okay, no problem. All right, guys. Have a wonderful day and a wonderful night. Yeah. Someone is asking a question. How can we know when to talk? Okay, I talk about futures. I guess you came late. I was talking about risk management on futures and how to protect yourself against getting liquidated easily. But don't worry, the record is available. I will send it to you guys. So how can one know when to stop out of trade? Now, for you to know when to stop out of trade, first thing first, you must know tech analysis, because stopping out of trade, you have to know what do you call it? The next resistance, the next support, to know whether to use to go to get out. So you have to know tech analysis before you can know when to get out of trade. Assuming you partake in the last training we had, maybe I guess last month also, you should know how to do that. But I guess you're not part, so we'll look for a way to. I will send you a link also. Yeah, I will send a link in a group so that you're able to do that. Yeah, don't worry, I will send you a link. Remind me that I promised to send a link for you. Like, it's a video, I recorded it on how to know when to get out of trade and the rest. So just remind me. So like you bought early and it's going up, the best time to sell before it goes low again. Like you bought early and it's going up, best time to sell before it's good. Okay, yeah. Even before, whenever a particular coin is going up and reach a particular level before coming down, that means there's a particular resistance at that particular level. So as a trader, as a tech analysis trader, you will know when to where to identify and how to identify that particular level. Do you understand? So that is why I say I will send you a video. So remind in case I forget. So another one. The type of trading, I mentioned it. I guess you came late. I mentioned it. The different type of trading we have. If you're talking about analysis, I talk about fundamental and technical. And if you're talking about trade, we have forex trading, crypto trading, forex, stocks. We have binary option. I talked about it. Don't worry. If you hear this particular video, I will send it to you. Sure. You can message me via Telegram group. Sure. We can't type via the Telegram. Okay, you can't type. I will, don't worry. Thank you very much for driving my attention. I will go and change the settings. Thank you very much. Yeah, trading view. Don't worry, I will get the video for you to that. Remind me on that also. I will remind me. So that's not a problem. Send you that one, that one. Okay. All right. Thank you very much, guys. Have a wonderful day and happy trading. God bless you all.